Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe, and we're producing this episode for GoodCrowd.info. Our guest today is our sponsor, Todd Crossland, the CEO and founder of Seed Equity Ventures. Todd, welcome back to the show. We're thrilled to have you again.
Devin, thanks for having me.
We really appreciate your support of the Your Mark on the World Center and recognize, frankly, we just could not do the work we're doing without your financial support. And we appreciate that. We are excited to talk to you today about some of the progress some of your portfolio companies have been making, specifically DemoChimp, now called Consensus, and Micro Benefits, both having closed big rounds in the last 30 or 40 days. Why don't we start with DemoChimp, now Consensus. Tell us a little bit about what the company does, and then we'll talk a little bit about their deal. But tell us what they do.
Sure. So when you look at the large sales organizations throughout the world that are salesmen and women in those organizations are looking to set up a webinar to pitch their company product or service. A good salesperson can do 4 or 5 of those hour webinars a day. What DemoChimp does is it takes all the information for a given company, and the webinar typically a salesman would go through a pitch deck and walk them through a WebEx of their product or service. And what DemoChimp does is they take that presentation and they put it into a nice consumable video. And so what happens with in the typical sales cycle for a company, somebody receives a pitch from a vendor, and then if they like the pitch, they get somebody else on their team to review it. They set up another webinar, then eventually it gets to the CFO where they're gonna have to sign off on it. They want to see the pitch. And so this really reduces the sales cycle for a company, and they have estimates of 30 to 40% in reducing the sales cycle. So when they prepare this presentation for the company, they can then be effective in going out to a few dozen companies a day with their sales presentations, as opposed to just doing a one-off webinar through the process. And so when we met them back in 2014, they launched in February of 2014, and they were just beginning revenues back in the summer of 2014 when we made our first investment. And since then they've grown, added lots and lots of customers. Their monthly recurring revenue has increased substantially. And then, as you saw in the press release, they recently completed their Series A round for $4.2 million with a syndicate of large venture capital firms.
Yeah, it's a very big milestone. Let's talk a little bit about that deal. Did the valuation get disclosed on that round?
So they typically don't disclose the valuations, although I think all the investors are happy that they came into the seed round, I would say.
Okay, so what you're saying is it was an up round.
Correct.
And now you had brought in 1 or 2 rounds of seed equity in this deal.
Correct.
2 or 2?
There were 2. So our investors invested in 2014 late summer, and then again at the beginning of 2015.
Great. And so that got them through another 18 months or so before they closed on the second round. And this round included Peak Ventures and Nobutaka Mutaguchi. And Nobu's kind of a famous super angel that invests in Utah and elsewhere. So this is a Utah-based company, kind of a homegrown success for Seed Equity Ventures, right?
Yeah, so Garen Hess is the founder, and he's had a very successful career and entrepreneur, and has built a great team and a great company. And just from the first meeting we had with him, 2 years ago, it was evident that there was something special about him and his team. And I think one of the things that I enjoy most about this business is to meet with lots and lots of companies and founders. You get to hear their vision, and then we hope that we select the kind of the cream of the crop. And then as we do so, and we see investment from us and other firms come into these companies, they hire more employees, their businesses grow, and so there's a fulfilling process to this as well that I personally enjoy.
What was it about the founder that so impressed you? You talk about him as if that was a key part of your investment decision.
Yeah, it really was. And for the most part, with these early stage companies, the old saying, "You bet on the jockey and not the horse." With this instance, we liked their idea. We liked kind of the traction that we were seeing, but more importantly, the founder was just phenomenal, and he had a vision, and we really thought and believed that he would be successful, and we're happy to back him. So
that's great. Now, what did he do, or what did the company do over the 24 months or so since you made your initial investment and the A round? What qualified him for the A round? I guess what I'm getting is I think there's a lesson here for entrepreneurs who've had your seed round. They're looking for an A round, and plenty of entrepreneurs are in the same boat. How did they get to that A round? What did they have to accomplish?
Well, and so Peak Ventures, I believe they were in the seed round as well. And I think what Garen did that was so impressive is, his monthly updates to shareholders were pretty unvarnished, and talked about the challenges and the successes. But he had a really great update every month for what the company was doing, and both the challenges that it faced and then the successes that it was having. And so I think my advice to entrepreneurs, as you get that seed money in your first round, don't forget about those early investors, because those investors could, one, be investors in your next round, or they could introduce you to larger investors that can help you in your A round. So yeah. I think cultivating that relationship with your investors is just as important as cultivating your relationship with your customers.
That's a great insight. Now let's talk about Micro Benefits. Micro Benefits was another one of your portfolio companies. This one is not a Utah company. In fact, they're based in Hong Kong. A great geographic contrast, juxtaposition to tell us a little bit about your portfolio and your investment strategy. But tell us a little bit about their deal. They just did a $10 million deal.
Yeah, so they closed. It was a Philippines public company invested in their latest round, and they bought 23% of the company. So you can actually do the math on the value of that deal based on their investment, which was a significant investment, and gives them lots of runway going forward. What's interesting about Micro Benefits, and it kind of goes along with the type of things that you're involved in with impact investing and spreading good in the world. Micro Benefits, they've created a company and platform and software for employee engagement, and to really help employees have a higher quality of life working for a company. So Micro Benefits, they primarily are working with large companies in China. Think of Nike, Apple, the big factories in China with really hundreds of thousands of employees. These factories, it's pretty phenomenal. I've learned as we did due diligence on the company, they have about a 15% monthly turnover rate with their employees.
It's a wonder they stay in business with that kind of turnover, isn't it?
Yeah, so they live at the factory, and then they just go to the factory next door with a different company, and there's no loyalty. And so what they've done, Micro Benefits, is they've created software and an app for all the employees that they can engage with the companies. One, when somebody joins one of the factories, the factory will send out a certificate and package to the family that might live out in the provinces and says, your son or daughter are working for us. Here's a little bit about our company. And then they have this app for the employees that they can do online education, they can do online surveys, online tests, they can learn more about the company, they can learn more about the benefits. And since they've launched in China a few years ago, they've reduced the turnover rate at these large factories by 30 to 40%. And a turnover rate of 15% a month is so expensive for these factories. And any improvement they can get in that turnover rate is a benefit. So what we like about this company, they were growing really exponentially, and but they were also doing a lot of good for helping these factory workers in China. And then with this investment, I think they'll be growing, from China throughout Asia as well.
That's really exciting. And the potential with what are the 300 or 400 million employees like this just in China. The scale potential is huge, and I guess that's why they got that tremendous valuation. Somewhere over $40 million already. Really a great story. How did you come across this company, and tell us a little bit about sourcing that deal?
So this deal came to us from a local venture fund, Peterson Ventures. They were investors, for the last few years with them. So it was through that connection with Peterson Ventures, and that's how we met the company. Then we met the CEO probably 3 or 4 times. Has been to Salt Lake. So that was an introduction to us. So as I mentioned, some deals we get right through our broker-dealer platform that come in through the website, and then some get referred to us from other founders, and then some from small venture funds that introduce us as well.
Now, I've got to ask: Are you willing to tell us what your basis was, your investor's basis in the micro benefits deal? Now that we see, I think the per share price was about $13 per share in this last round. Are you happy with that round?
Yeah, so that was a nice increase from where the seed round that we invested in. It was actually a note round. Not really disclosing our investors and LPs in the fund would know that amount, but that's kind of part of the process that we look to finding these types of companies. And then we're excited as they get to that level. So we didn't invest in either of these, either the Series C with micro benefits or the Series A with Consensus. Once they get to that level, then they're kind of on their own, and they're in good hands with big investors as well.
That's great. Well, what lessons do you draw from these 2 experiences that you would coach your other portfolio companies to be doing in order to have this kind of success?
Well, I think as I mentioned, I think in particularly with Garen Hess from DemoChimp, now Consensus, I think the work ethic and the quality updates to all of your investors that was important to getting to, other than running the business and doing well, keeping the investor base, updated and informed. It just made for doing this next round a lot easier for him than starting from scratch with new investors. But I think the lesson is, once you find your niche, then be smart with the capital you have, and then when you start to get traction, then apply more capital and do it wisely. So
those are great insights. Well, Todd, thank you so much for taking the time to be with us this morning, and we really appreciate you giving us kind of the inside scoop on these recent transactions. It sounds like you're having tremendous success, and we want to wish you every success in rolling forward. But before you go, tell people how they can best connect with Seed Equity Ventures if they'd like to sort of get in the queue for some of your attention.
Sure. So the website is seedequity.com. Actually, if they want to email me, they're welcome to do that. It's just crosland@seedequity.com.
Fantastic. Well, Todd, again, thank you very much for joining us today, and we wish you every success in growing these companies.
Devin, thank you very much.
All righty, let's do some good.